Good morning from London. I'm Anna Edwards alongside Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. President Trump arrives in South Korea for key meetings with Asian leaders, saying he expects to lower tariffs on China when he meets with Xi Jinping tomorrow. Copper prices hit a record. Stocks get an AI boost ahead of today's Fed decision. Asian indexes and US futures gain on tech profit optimism. Meta, Alphabet and Microsoft report results later today. Plus, European bank earnings are in full swing. Santander, UBS and Deutsche Bank all post a beat on third quarter profit. We'll hear from the UBS CEO and Santander CFO shortly.
In the meantime, a broader check on the markets. Anne already talked about the futures picture, but really keep an eye on what DAX futures are doing. They're the underperformer of the morning, down about 0.2%. Outside of the bank earnings, there's a couple of spots of weakness that you really want to keep an eye on. Mercedes-Benz, of course, one of them. Euro dollar as well, 116. It is Fed day after all. Does this 397, is that where we end on the 10-year at the end of the U.S. session? The countdown to the opening trade starts right now.
A warm welcome to the programme, everybody. This is the opening trade, and we have a lot to discuss this morning. Kriti, we have so many topics on the agenda. President Trump in Asia, and that does seem to be setting some risk appetite back into these markets, expectation building that we'll get some kind of deal, as partial as it is, on trade over the next couple of days or so. That's pushing some of the lines around tech, pushing up the futures over in the United States, not in Europe. On top of that, we've got the Fed later, lots of tech earnings to talk about, but we should start with the banking sector. We're going to be hearing from Sergio Ermotti at UBS in just a minute or two, but the numbers from UBS really strong.
I mean, it's suffice to say, they beat expectations in a big way. And the expectations were quite low to begin with. They're dealing with a lot of legal costs. They're dealing with $26 billion of capital increase requirements to fight with the Swiss government after still trying to integrate Credit Suisse as well. And yet, still coming out with massive profits when it comes to their investment banking business.
Yeah, absolutely. And one of the things they're able to do is on the cost side, where they've provided for larger costs around litigation, for example, and legal costs. If they're not going to incur those around Credit Suisse, they're able to write those back in. And so that is something that has been benefiting the business. On a slightly more sceptical line, they are talking about clients increasingly focused on downside protection. So there is that slight word of caution perhaps coming through. But such a big topic of conversation has been exposure to credit, to private credit, and all the things that sit alongside that, underwriting standards in the United States. And there's been no mention in the UBS release of whether they have exposure to any of these particular high-profile collapses that we've seen in the United States. So Guy Johnson has been in Switzerland talking to the CEO of UBS and started his conversation with Sergio Ermotti on that subject.
We have no exposure to First Brand, and when you look at the other exposures, they were clearly in selected areas in our asset management business, in strategies that were high-yield strategies. We are one of the largest high-yield asset manager in the world, so I think that all these exposures were in areas where the clients decided to invest in that kind of sophisticated clients, where there was no breach in our guidelines on how to invest money, so no policy breaches, and in a sense, it's always unfortunate when you lose money, but it's part of a high yield strategy. And now we mobilize to try to basically protect the assets of our clients, and we move forwards. But I don't see this as being a broader issue.
Some people look from the outside in and say, this is another Greensill. There are similarities here. This is something that is happening within Credit Suisse in terms of risk management. Is that a fair comparison?
No, that's a totally unfair and unsophisticated comparison, I would say, because first of all, we were not relying on third-party providers for the insourcing of that.
Fair point.
The funds were not labeled as low risk. Rather the country.
They were high risk.
Rather the country. So I think it was very clear to clients what they were investing on, and so in that sense, it's a completely different story.
David Solomon yesterday was talking, and he was saying there's no systemic risk here. But Jamie Dimon over at JP Morgan saying There's one cockroach, there are going to be more cockroaches. Are you in David's camp or are you in Jamie's camp?
Well, I don't know. In my own camp, I don't.
So how would you describe it?
I look, I think that, we should not be complacent. I think that when you look at, generally speaking, all asset classes nowadays are fairly priced or even above fair value. So when you look at private markets and private credits in particular, we saw a lot of developments in the last few years, and I think private credit has a very useful role to play in the financing of our economies, and the vast majority is good quality. But we haven't seen the asset class performing in a downturn, in an economic downturn. So the issue is clear that one has to really think about what is the price to be paid for the lack of transparency and the pickup.
And you think there will be a price?
Well, naturally, as long as you have a diversified approach to the asset class, no concentration, the expected returns compensate for that.
That's the UBS CEO Sergio Ermotti speaking to Guy Johnson, of course. And Kriti, so the numbers really stellar over at UBS, beating on all kinds of metrics. But the conversation, as we've seen with so many banks this quarter, deviates from that to what's been going on in private credit. And I talked about this with Deutsche Bank as well. And we've heard earlier on this morning from Deutsche Bank, and I spoke to the CFO there. Once again, there's lots of positives in the numbers. The numbers themselves have beaten at pretty much every level. The FIC trading, in particular around rates, looks to be really strong. But you have to go into these conversations about credit, about what's happening now. Now, on the Deutsche Bank side, they've managed to dodge all of those pitfalls, if you like, all of those high-profile bankruptcies that we've been talking about this quarter. They've managed to dodge those, and they're confident about what they can do with the next stage of their three-year plan. They're just coming to the end of a three-year plan at the end of this year.
Well, speaking of a new strategy, we're going to hear from Santander as well in just a few minutes, and we're going to speak to the CFO there because they're also about to launch a new strategic plan as well. And a lot of this is really interesting because some of the gains, and you saw this in UBS, you saw this in the Deutsche numbers as well, is coming from their investment banking businesses, which is interesting because haven't we just spent 2 years talking about how the capital markets were closed, how deal making was kind of dead, and now you are seeing some of these bigger institutions really show up on that front. I think what's also interesting is that when it comes to the trade around some of the European banking names, it's the amount of buybacks that are coming in. We thought that we would maybe lose some of the momentum around the buybacks as we get further and further throughout the year. That hasn't happened. They're doubling down.
Yeah, there is some concern, isn't there, around mispricing of certain assets. We've seen UBS referencing how their clients are taking out downside protection because we're quite close to all-time highs in some asset classes, that kind of thing, expensive valuations being the topic of conversation. So there's that. And then with the Deutsche Bank conversation, we were talking about mispricing in credit, whether they were concerned there, and absolutely yes, they are. So there is the sense that all of this conversation around private credit, even if it doesn't touch the individual bank, they're all looking at it. They're all wondering whether competition for customers with private credit is going to drive down those spreads and perhaps take them to levels that are not sustainable.
And I think that's such a crucial piece of the equation, especially here in Europe, where the public markets aren't as dynamic as perhaps the ones you see in New York. So a lot of companies, institutions, family offices, et cetera, or family corporations that have been held within this region for generations are ultimately tapping into that private credit line. So interesting how to see if it chills that kind of momentum. Where you are not seeing a chill of momentum seems to be in the tech space. Every day we have this conversation, a new record high in various index around the world, this time actually pegged to some optimism around trade. Who would have thought? We are in the countdown, in the final countdown to this high-stakes meeting between Donald Trump and his Chinese counterpart, Xi Jinping. And already there are a couple of different things that have hit the agenda. We've had the fentanyl tariff story. We've had copper. We've had soybeans. There's lots going on there. But the real highlight seems to be that Nvidia is part of these trade negotiations.
Yeah, absolutely. So President Trump suggesting he's going to be talking about Blackwell chips with President Xi because China, when what was on offer to them by the U.S. administration was a sort of lower level of chip, they said, no, thanks, we don't want those. And so Jensen Huang has been talking about how he's found it difficult to get some of his chips into China. There's no assumption in the Nvidia numbers that they sell very much into China. So in that sense, there's upside for risk appetite. There's upside for estimates around Nvidia and for risk appetite if we get deals on trade and if they include Blackwell, then that's certainly in focus. And as you rightly point out, this is part of a wider risk push that we're seeing in markets as a result of Xi and Trump getting ready to meet. Trump saying that he is, positive about this China deal that's coming. Copper hitting a record as a result. China buying soybeans, as you say. So there's lots of positivity out there. Although interesting that this is pushing up US futures, NASDAQ futures, because it's expected to push up the Nvidia share price, but it's not pushing up European equity futures, as if we've got something a little different on our minds. And the bank earnings have been strong. So, but not all of the earnings stories this morning are strong, I suppose.
It's fascinating. I'm curious to see how Nokia opens today, given that Nvidia has now partnered. This is day 2 of 2 European telecom companies that Nvidia has partnered with. In Deutsche Telekom, we saw a rally in the shares yesterday off the news the prior day. In Nokia, will we see the same?
Well, and I think we saw some of that yesterday, didn't we? So you're right that story, yes, around that Nvidia taking a $1 billion Nokia stake, and that pushed up the Nokia share price by 20% in yesterday's session. So, we'll see if we get a day 2 on that, on that push a little bit higher.
Is there an AI premium at the end of the day, or does the AI premium even apply to to European stocks, I should say, or is it really all about the trade deal, the sentiment, etc.? Not to mention, on the very long agenda of things we have to discuss, we have to talk about the Federal Reserve. I can't believe we've waited this long to talk about it.
Yeah, we do. We have to talk about it. But we're sort of in the darkness around data, aren't we? And so that gives us perhaps less to talk about than we would usually. But 25 basis points cut, that is expected. Very little guidance is expected, partly because of the lack of data with the shutdown, but also because the FOMC is quite divided. Even if Jerome Powell has put the focus on labour markets, there are quite a lot, Kriti, of FOMC voices who are still talking about inflation. I know the Markets Live team has done some analysis showing the number of mentions of inflation. That does seem, that's what they're paid for, but that does seem to be where their focus is.
It absolutely is. I'm going to quote our colleague Lisa Abramowitz over in the States. She said, how can you be data dependent if there is no data? And I think that's the question that Jay Powell basically has to address here. You've had one print coming in since the government shutdown, a government shutdown that isn't looking to abate anytime soon. Is that going to show up? The balance sheet, of course, is another question. Do you start to see some of the runoff start to actually affect pricing, or is that in the price? Is this market convinced that cuts are the only way forward when, to your point, the FOMC is starting to shed a little bit of doubt on it?
Yeah, and that balance sheet issue, whether we're going to see an end to quantitative tightening, they'll stop the balance sheet runoff. When exactly is that going to happen? As soon as very shortly, perhaps, seems to be in the conversation. But there seems to be less certainty around that than whether we'll get the rate cut and a lack of guidance. I will also point out, and this is certainly news you can use this morning, we are slightly closer to America this week, aren't we, in terms of time zones? And so don't get caught out in Europe. The Federal Reserve decision and the press conference and everything comes an hour earlier than is usual. Let's tell you what else is coming up on the programme then. We'll be speaking, as Kriti's been saying, to José García Cantera, the CFO of Santander. Pooja Kumra joins us, senior European and UK rate strategist from TD Bank. The Fed looms large. We also have the BOJ. We've got lots of rate decisions to think about this week, and we'll get a European perspective on all of that. Ngozi Okonjo-Iweala, who's the Director General of the WTO, joins us from the APEC Summit. So lots to discuss when it comes to trade, of course. And at the Market Open, we'll be speaking to Monica Defend, head of the Investment Institute over at Amundi.
An all-star lineup. We're going to hit the news flow from quite literally every single angle. Plenty of data, plenty of things to watch out for on the day book ahead. This is what sets your agenda. Netherlands is having a snap election. Our very own Oliver Crook is on the ground. Remember, there is a major story there, not just in terms of geopolitics, the shift to the far right, but of course how some of the pension funds are expected to react to, of course, this election. And then ultimately, do you start to see a fund flow situation in this bond market? And speaking of data and rate decisions, it's not just the Federal Reserve that's in the limelight. The Bank of Canada has a rate decision as well, 1:30 p.m. UK time, plus plenty of earnings on both sides of the Atlantic. Airbus here in Europe after the European close, but over in the States, you have Meta, Alphabet, and Microsoft reporting.
Yeah, absolutely. I mean, so much focus on these hyperscalers and whether they're going to keep spending. It was interesting, Jensen Huang yesterday talking about an inflection point on AI. And for him, what that means is that people are prepared to pay for what it is that his business supplies to the hyperscalers, who then supply to the rest of us. So it's really interesting how you monetize the whole AI chain. Maybe that'll come up in some of these tech conversations, but AI spend is certainly going to be a focus when it comes to Meta, as well as, of course, the bread and butter of the ad business, whether that's still paying off. Alphabet, cloud, Microsoft Cloud, a lot of focus on the cloud side as well, and how those parts of the business, in particular when we saw Amazon running into problems with its cloud business just in the last couple of weeks or so.
Yeah, and speaking of Amazon's cloud business, they have this massive stake in Anthropic, which has now started to partner with Alphabet and Google as well in terms of getting their cloud business. You also have, I think in the last 24 hours, OpenAI confirming and kind of shifting their structure to a for-profit model, one that gives Microsoft officially a 27% stake. So I wonder what that does to Microsoft's trade-offs. One, AI ambitions, but ultimately the balance sheet as well.
And what does competition with the likes of ChatGPT do to Google and Alphabet? On the one hand, they've got their own product on that front, and so maybe they're managing to benefit from that move toward chatbots away from maybe the vanilla search. But on the other hand, maybe they're feeling some competitive pressure, so no doubt that will be part of the conversation as well. Here is an update at 11 minutes past 7 here in London on some of the other stories that we are covering this morning. Hurricane Melissa is expected to make landfall in Cuba just hours after it became the strongest recorded storm to strike Jamaica. The storm left hundreds of thousands of people without power on the island and forced hospitals to evacuate. Melissa crossed into Jamaica with sustained winds of almost 300 kilometers per hour, making it a rare Category 5 hurricane at landfall. President Trump has defended Israel's strikes against members of Hamas and said he thinks the peace deal he brokered earlier this month will hold. Israel ordered what it called forceful strikes against the militant group in response to attacks on Israeli soldiers in Gaza, which the country's defense minister called crossing of a red line. The official Palestinian news agency WAFA said at least 20 people have been killed in the strikes, citing medical sources. And US Treasury Secretary Scott Bessent called on Japan's new government to give the nation's central bank the space to combat inflation. Bessent's comments came a day before the BOJ's next policy meeting, where it is widely expected to hold its benchmark rate steady. Most economists forecast an interest rate hike by January.
Coming up on the program, as we mentioned, voting is underway in the Dutch snap election. We will head to The Hague to discuss what is top of the agenda for those heading to the polls. Plus, on the earnings front, Mercedes confirming its annual outlook and saying they will proceed with a €2 billion share buyback. Is that good or bad news for this market? We'll bring you more on that later. But up next, we're sticking with the earnings theme, except this time in the banking sector. José Cantera García, Santander's CFO, joins us to discuss the bank's third quarter earnings beat. A U.S. expansion could be lifting its profit to a record. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg. We are about just over 40 minutes away from the opening trade. When you look at the futures picture, I'm not sure there's a narrative here. And I admit, I kind of expected one, given that we are starting to see some trade optimism show up between the United States and China. Maybe something to watch at the open. In the meantime, the FTSE 100 futures are higher by 0.2%. By comparison, though, the DAX lower, at least in the futures picture, by about the same margin. Lots to shake out here, lots of earnings to price in. Let's get to one of them that we're keeping a firm eye on. That, of course, is Santander. It looks like their profits are hitting yet another record. I'm having deja vu. We had this exact conversation last quarter as well. And look, they're increasing some of their investment banking revenue. They're increasing some of their presence in the U.S. and not to mention keeping one eye firmly here in the U.K. as well. We've got the perfect person to talk about some of these results. The CFO of Santander, José García Cantera, joins the program this morning. José, pleasure to have you as always. Thank you for making time for us this morning. Just walk us through some of these numbers here. I mean, across the board, we are seeing banks in Europe put up more buybacks, more revenue, despite an uncertain world. How do you make sense of that?
Good morning, and thank you for having me on the show again. Yeah, we had a very, very good quarter. Again, record profits at 3.5 billion, 10.3 billion in the first 9 months of the year, very much in line to meet all the financial targets that we set for 2025. And despite the uncertainty in some markets and around some industries, reality is that banks and Santander we're doing very, very well. In our case, it has to do with our scale and diversification. We have some markets that are doing very well year on year, like you mentioned the US, but we are also managing the net interest margin in Europe, with, as you know, with lower rates is under pressure. We are managing NII in Europe also very, very well. We are making good progress in our transformation. Costs are down year on year in euros, 9 months over 9 months, which is very, very difficult to achieve. But this is one of the commitments we made at the beginning of the year, and we are there. And also asset quality is marginally better relative to what we expected. So I think, within, let's say, normality, I would say, doing very well in some of our key markets.
Well, Jose, you use the words asset quality, so we have to naturally talk about the private credit space. It seems to be the topic on every bank's mind globally. We've had plenty of conversations right here on Bloomberg in terms of exposure, not only to kind of bad eggs in the private credit space, specifically Tricolor and First Brands and the collapse there. Jose, my question to you is twofold. One, do you have any provisions when it comes to those two companies? And two, what do you make of the conversation right now? Is this something to be worried about?
The structural trends in asset quality are good. The key variable to assess the future evolution of asset quality is unemployment. And unemployment remains stable, strong in all the countries where we operate. We're seeing marginal deterioration in some countries, but from very, very low levels. So there is nothing structurally that suggests that asset quality will be under pressure. Obviously, there are some talks about some sectors, industries. In our case, the exposure we have to non-bank financial institutions is less than 1% of our total portfolio. So it's really insignificant in the context of the group. And obviously, we are very well provided, not only for the names that you mentioned, but whenever we see the need to be prudent, we are prudent.
So, Jose, just to be clear, you do ultimately have exposure to both Tricolor and First Brands. And just to be clear, you're saying there is a potential at the end of the day for systemic risk. Am I hearing that right?
No. What I'm saying is that we don't see systemic risk because, again, the structural the support for the asset quality is structurally strong. Beyond that, there are obviously cases. And, Jamie Dimon said that we should be aware of some of these one-offs, and we fully agree with them. We think we need to be vigilant, but when one looks at the underlying structural trends, and the key variable is unemployment, they remain robust.
I'll return to that theme in just a moment, Jose. Good morning. Can I ask you about the UK? It seems that your UK business is delaying third quarter results over uncertainty around motor finance. Some other banks who have exposure to this motor finance issue and the mis-selling of it have taken provisions already. You seem to have adopted a different strategy. Why is that?
This is an issue that is not material for the group. It's a very important issue for the car industry in the UK. And all the parties involved in the process should work to find a fair conclusion from the consultation paper from the FCA. There are, however, significant differences between the FCA and the Supreme Court ruling. And this is, again, a consultation paper. So it's important that these differences are resolved to avoid having unintended consequences in the access to credit and the supply of credit to this very important industry in the UK.
If I could take us back to the US, Jose, because you often provide really interesting insight as to what's going on with the more consumer-facing side of your business there. In terms of consumer sentiment in the States, and I hear what you're saying about if unemployment isn't going up much, then that puts you in a good position. But consumer sentiment, consumer confidence is at many decades low. But at the same time, for the sector as a whole, consumer credit has been holding up pretty well. How do you explain that distinction? Is it and do you see that at Santander? Are you exposed to sort of better quality parts of the consumer space? What are you seeing?
The main activity in terms of credit in the US is auto lending. And what we are seeing in terms of asset quality is the delays over 90 days are up marginally, but the final losses are very much stable, and they've remained stable over the last 4 or 5 years because the recovery rates remain very, very high. Used car prices are up year on year. And again, after maybe a delay of 1 or 2 payments, reality is that consumers end up paying their debt. So there are some indications of some delays in some sectors, but at the end of the day, this is not translated being translated into losses.
Can I ask you about M&A strategy, José? After the TSB deal, there's still a lot of talk about what you might spend money on. Are you looking at bolt-on acquisitions? The US, Mexico, are they still areas that you want to grow in?
Well, we are not looking at any M&A at the moment. I think our strategy is to develop one transformation and to continue to make progress in the efficiency, in making efficiency and making and all the synergies of operating in different countries and working together can generate. So we are not looking at any M&A at the moment. Obviously, we have the fiduciary duty to look at opportunities if they come up in any of the countries where we operate. But in any case, this will only be some bolt-on acquisitions. So again, we are focused and centered on our own BAU strategy at the moment.
All right, Santander CFO José García Cantera joining us this morning off the back of Santander's results. Profits, of course, hitting another record. We thank you so much for your time. Fascinating conversation there with him. We kind of ran the gambit on questions. I'm going to start with the private credit piece of that. He says there's no systemic risk. He's in the Jamie Dimon camp, not in the David Solomon camp. Or sorry, he's in the David Solomon camp, not the Jamie Dimon camp, which I think is interesting because we're starting to hear European banks really split on kind of what that risk potential looks like.
Yeah, perhaps not too much concern then, certainly suggesting that there's no systemic risk in credit, as you say. I'm really interested also in, when you're thinking about the credit story in the US, the underlying quality of the credits comes into focus. And really interesting what you have to say there about the US business, that there are delays to getting money in, but that the actual, those who are borrowing are actually paying back, and there isn't a deterioration of that in that sense. So that's of interest.
Yeah, absolutely. We're going to explore this later on our Banks Deep Dive. Tom Metcalf will join us briefly. Stick with us. More coming up. This is Bloomberg.
Welcome back to the programme. 30 minutes until we get opening trade for equities here in Europe. It is 7:30 here in London. Let's have a look at the futures picture for Europe. And actually, this looks fairly muted, doesn't it, Kriti? We're pretty flat on Euro Stoxx 50 futures right now. The story perhaps is over in US tech. It might remain there later on. There's plenty to talk about here in Europe. But in terms of the market where the risk on is being priced in, that's in US tech around Nvidia. So Nasdaq futures are up by 0.4%. Not clear how that plays out for European markets. In yesterday's session, we saw the US market doing really well, and Europe was pretty range bound. So maybe that will be the story of today as well, although we've got plenty of individual corporates reporting with some really good stories, in particular around the banking sector.
This might be more of a micro story than a macro one, even though, to your point, we've seen plenty of record highs over in the U.S. and over in Asia as well. Maybe there's a little bit of a catch-up trade to be had in about 30 minutes' time. When it comes to the bond market, I have to say it's a little bit of a snooze fest, but I think I might blame the Federal Reserve on that one. I think that might be the one that maybe shakes global bond markets today.
Right, and we're certainly waiting for that later on in our trading day here in Europe. Joining us now for a look at the markets, Markets Live Executive Editor Mark Cudmore with us from Singapore. Mark, good morning to you. Let's do 3 minutes on the markets then, and let's start with risk appetite and whether you see any reason to be bearish right now. President Trump's talking positively about the trade deal he wants to do with China. There's a lot of excitement, should we put it that way, around tech stocks, Nvidia in focus, all of the tech earnings. Do you see any reasons to be bearish?
There are no fundamental reasons to be bearish right now. What I mean by that is we're about to get another Fed cut. We're getting trade deals promised all over the case. We're getting, generally growth is kind of holding up okay. Earnings stories is good. Everything is positive. Now, I guess the reason people are worried is because we all know that. It's all priced. And I think that, valuations are expensive, but valuations are never a reason to be bearish in isolation. And the fact it's all priced maybe means you don't want to be bullish anymore because it's already fully priced. But it's not a reason to be bearish. You've got to wait for that negative catalyst, and there's not one just now.
Well, Mark, maybe push ahead to it for us if you can when it comes to that Federal Reserve decision. If everything is going well, what could Jay Powell say to shake this market?
Theoretically, if he was super hawkish, it would upset the market a little bit. But I just don't see how the Fed is going to be much of an event at all. Look, You two both know that I think the ECB is always boring, or almost always boring. The Fed is normally really interesting. Today's Fed is super boring because there's no data for them to provide an updated view on. We get no dot plot, we get no updated forecast. The Powell can't really say much. The most controversial thing he's going to say is, he's going to get a question about the shutdown, and maybe he might kind of err in how he phrases things. But he's a super experienced communicator. Jerome Powell is good at his job in terms of communicating clearly and not stepping over the line. So I don't think he's going to say anything too controversial. But he's going to have to say that he can't provide much forward guidance. They just don't have certainty. So I don't expect him to be, overly hawkish or dovish, which means market pricing will stay roughly the same, expecting another cut in December. People are trying to get excited about the end of QT because they've got nothing else to get excited about. Of course QT is going to end. Sure, there's a little bit of nuance exactly which month and the composition of how it ends, but it's really not exciting. It's people trying to generate excitement because they've got nothing else to look at.
OK, well, let's try and talk about volatility, shall we? 2025, we've seen lots of news headlines, and they've driven some volatility in specific asset classes for short periods, but not necessarily for very long, Mark. Do you see a return to volatility? Is that possible to predict?
No, I think it's going to be a kind of a sustaining of what you've just outlined there, and I think we're going to have some more big dips in the weeks ahead. As I outlined, everything's bullish at the moment, but it's priced super bullishly, which means just one thing falters. Trade talks disrupt, the Fed manages to upset, something goes wrong on growth, some earnings upset. We'll get a powerful dip because of how things are priced. But with all the other drivers still positive, it'll just be a dip, and that's important. The backdrop is still positive.
Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Cudmore. You can get lots of analysis and insight from Mark and the rest of the Markets Live team on the Bloomberg Terminal. MLIV Go will be the function to use on the Bloomberg Terminal. And despite his downplaying of the Fed decision, the MLIV team will be poised to provide you with analysis later on that. Joining us ahead of that Fed decision and to think about the broader rates story, Pooja Kumra is with us, Senior European and UK rate strategist over at TD Bank. Pooja, nice to have you with us. So Mark has taken all the wind out of our sails when it comes to the Fed story today. I can see where he's coming from, though. If there's no new dot plots and there's no new data to get commentary on, can the Fed say anything new? Do you expect much, really, from the Fed today?
I don't want to say it, but yes, I think Mark was right. We won't get much from Fed, but I think what we will be watching at is one of the key questions Fed will be given that, okay, if the shutdown continues, what is the key data that they are looking at, right? We know ADP is releasing data on a weekly basis. That's the key thing that they're looking at. So I think for me, it's what data they're focusing on and how do they actually explain this ongoing dichotomy of the labor market weakness and a strong consumer. This is one topic that all Fed members have been talking about. They don't have an answer, but I think that is something that we will be looking at.
OK, so the Fed's textbook on how to manage a shutdown will be something we're watching for. That'll be interesting to see. How close do you think we will be to neutral after we get this Fed rate cut? Is that also difficult to say, given the lack of data that we have at the moment?
I think front end, I think for almost all markets is so nicely priced right now. You don't want to move it. Like we are pricing around 3%. And I think that's why at this level, I don't think Fed will move the markets in any way or the other. And markets are also very cautious of not pushing neutral much below 3% right now. So I think front end has lost that glory to actually play around, and especially we are at the end of the year, right? So we are not going to miss much in terms of meeting. I think what is getting more interesting is how you want to play duration, because the key themes of, again, supply. I mean, QT will reduce supply, but it's not a game changer per se. But also, how does the Fed politicization impacts duration? I think those are the stories that will, again, get much more focus as we head into 2026.
Have we normalized a long-term inflation rate of 3%? Is that just our new normal now?
Well, we have not been on target for the last 5 years, so I think this is the new normal.
So you're calling it. You're like, this is long-term now.
We're not saying it directly, but subtly.
You just said it on TV.
On international television. Understood. Pooja, talk to us a little bit about these markets, though. They are, to your point, still very cautious, but also kind of with the dovish tilt as well. Are the markets treating a deceleration in global growth the same way that they're treating a potential for a recession? Should there be a difference between the two?
I mean, certainly there is a difference between the two. One definitely gets a very big, strong bid to bond market. And recently we have seen that, but it's come without that move in growth. I think what has been driving is not the growth sentiment, it's more about the equity sentiment that you have been talking about. Because, like in general, as an investor before these 2-3 years, I would always think about where is the spare capacity in the economy. But now I'm looking more at there's more spare liquidity in the economy to actually, place in different asset classes. So no matter how investors say that, spreads are very tight, but we know that there's so much liquidity, there's so much cash still in the system that is pretty much not afraid in putting back money in these credit spreads.
Yes, so I suppose I was going to ask, so is that the link I'm looking for then? If I'm thinking about this AI frenzy and all the excitement that's very evident in stocks, and what that does to other asset classes, and think about your universe, Pooja, is it that it tightens spreads for the reasons that you just described there? I mean, people think about technology and what it does to inflation as well. I mean, how do you think about this AI boom and what it does to your world?
I think it's bearish for duration, right? Why would you buy bonds at these levels when you can get so much yield pickup in the other universe? But I think one of the key things for bond market is also markets look at what is the overall return. Like if you see the recent rally in rates is primarily driven by the fact that, your S&P was giving you much less return versus global bond market, which return was 4%. And I think that's where markets started to look at bond markets again. But I think it's definitely negative for the bond universe as from an investor's. I think it's more complicated for a central bank perspective because, yes, AI is very solid for growth, but AI also hampers the labor market. I think that is one of the key things that why we're in this low hire, low fire mode. And I think there's something to do with AI as well, which is taking some of these jobs.
OK, so that's certainly something we're watching. And let's pivot to the European conversation. And I'm thinking about the Bank of England at the moment, because we've got a budget that's due not till, where are we now, October? Yeah, not till the end of next month. Just wondering if we're in November already. Not till the end of next month. I mean, what's the relationship between that budget that we don't know about yet and monetary policy and what the Bank of England is going to be doing?
I think, for this budget, no matter what, we have heard way too much news on a daily basis about what's coming in. So it seems like it's going to be a non-event by the time we actually reach. I hope so it's a non-event. I think for BOE, the clear focus was the CPI, and last week it did come as a relief. So from us, we are still looking for the BOE to continue with their gradual and careful pace, which means another 25 basis points cut in the next meeting. But it also means that they do not want to sound dovish. They still want to have that hawkish bend to their rhetoric and also, continue to focus on the sticky factors of inflation. So there is a cut, but it does not particularly change the sentiment in the gilt market because we know we are still afraid of what comes on November 26th. Our base case and also what we are hearing from a chancellor is that they're not looking to increase gilt issuance. But I think the key thing is, yes, if they make this headroom, but are we in the same situation that every budget we are like, oh, how will we make that 9.9 billion?
And the suggestion has been that she wants to try and create more headroom, more sustainably, so we don't go back to this conversation every 6 months or so. Do you see any way forward that it is possible to do that, Pooja?
So they are talking about different types of taxes. And, we know IFS have made a 100-page document on the type of taxes you can actually use. But she will be able to make, the 20 to 30 billion headroom is pretty much possible. But I think it will definitely hurt some sectors of the economy, which we cannot actually let go of. So I think for me, it's still a bit of an austerity-linked budget, which should actually ease BOE's policy going forward in terms of cutting rate, because the chancellor is very careful that this time it should not hurt inflation. They don't want to get the loops that was basically given to us last November.
Well, speaking of the IFS, I think the FT wrote this up yesterday quite nicely, but the IFS had projected a £20 billion drag on the budget just due to low productivity. Is that something the gilt market can price in, that kind of number?
We have seen spikes all throughout this year because we have been scared about productivity. Now, IFS is looking at currently OBR is looking at a productivity of 1% over the next 5 years. So that was, IFS report was pretty much a big downgrade. I think one of the things is with OBR, you don't know whether they will actually still spread it out over their horizon. There's a lot of accounting gimmick that they can also use. So there will be a cut, but we are not looking for such a sharp cut as IFS. Just because, we know Chancellor is also looking at the supply side of the measures, and she's got much of the evidence from OBR in terms of the pre-updates as to how they're looking at it. So I think, for me, the Chancellor is going very much prepared for the budget with all what OBR has.
All right, we got to continue our tour of the global central banks if we can. Let's go to the ECB next. We have a decision right off in the footsteps of the Federal Reserve. Mark Cudmore said the ECB is always boring. Will it be boring tomorrow?
Again, he's right. It is boring.
We got to get you guys on together. But I'm curious, though, when the ECB is fascinating to me because all of a sudden it feels like we had just entered an era where the ECB and the Federal Reserve were on the same page in terms of the direction of rates that they were going. It feels like that splintering is now happening in opposite directions, where you are starting to see a potentially more hawkish ECB, maybe not to the point of a rate hike, but certainly not to leaning towards rate cuts, whereas the Federal Reserve, at least according to the markets, is a full in rate cut kind of mode. Yeah. Is that differential a problem?
I don't think so, because we have seen phases that this differential has existed, right? 2016, 2019, and again, we are in the same path. But the only one thing is, no matter how ECB implements its policy going forward, the beta of how European rates trade is so close to US that, even if ECB is not cutting, it will be driven by US. So we have rallied just because of treasuries rallying. So I think that impact will always be there. Also, when it comes to ECB, I think they have said that, yes, policy is in a good place, but I think we should understand good place is not a fixed place. And if they do see downside risk to inflation, I think that's why if you see the OIS market is still putting an optionality of an additional cut. And I think I will not remove that completely, because we need more evidence when it comes to both inflation and growth, whether this 2% is actually a good place.
All right. Preeti Kumar, Senior European and UK Rate Strategist over at TD Bank, joining us around the table, walking us through a global tour of the central banks. But she said it, a lot of it depends on what we hear out of Washington, and that's where we go next. President Trump arriving in South Korea ahead of a crucial trade meeting with China's Xi Jinping. We'll have more on that next. Stick with us. This is Bloomberg. I can barely hear you, Tim.
Hi, Stephen. It's Anna in studio. Can you hear me?
Good. Good morning. Good afternoon. Good evening. Whatever time frame you're in.
Nice to see you.
Yeah.
We are very much morning.
Although it does feel like
you're very much morning. That's right. Yeah. I don't even know where I am right now.
Well, thank you for joining us.
I am in Korea. Yes, I am. Okay. Yes, I'm in.
Yes.
Yeah.
Excellent. We've got that sorted.
Yeah.
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 Anything though. I'm ready and willing.
I don't think you heard me. Okay. Great.
Welcome back. This is the opening trade. We have 12 minutes to go until the start of the European equity session. And European equity futures, apart from the London market, could be flat to negative at the start of trade. Looks as if we're not going to get much of a positive sentiment boost from what's happening over in Asia or the tech conversation in the United States. But we will see how the European session develops. Now, talking of things in Asia, President Donald Trump has arrived in South Korea ahead of his much anticipated meeting with the Chinese President Xi Jinping. Markets are watching to see whether the two men can strike that trade deal and put an end to months of escalating tariffs.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon, like moments or very shortly thereafter. These agreements will be incredible victories for all of us because everyone is better off when we have stable partnerships, not plagued by chronic problems and imbalances. Probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
President Trump there speaking positively about the prospect of a deal. Bloomberg's chief North Asia correspondent Stephen Engel is in South Korea. He's been following President Trump on some of his travels. So, Stephen, the two men will meet then at the Asia-Pacific Economic Cooperation Summit, or APEC as it's called. They appear to be very much the main event at this, and they seem to be optimistic about the prospects of a deal.
Well, yeah, we're hearing a lot more from Donald Trump on the matter than from the Chinese delegation. So we'll get a lot more clarity on how the Chinese will read this out and what they will agree on when they have that handshake and then face-to-face time to kind of hammer out the details and perhaps sign off on some of the areas in which, Donald Trump's team negotiated on the sidelines of the ASEAN summit in Malaysia a few days ago and over the weekend. And then, of course, Donald Trump went to Tokyo. I was there at the same time with the U.S. delegation, and a similar vibe is coming out of South Korea today as well. You have Donald Trump saying all the right things, saying that it's a rock-solid partnership and at the strong allies in Japan and in South Korea. In the lead-up, of course, to the big meeting tomorrow on the sidelines here of the APEC CEO Summit and then the Leaders Summit, which also begins at the end of this week between Xi and Trump. And right now, we clearly know from that framework agreement that the United States wants China to relax its export controls on rare earths and magnets and critical minerals, which, according to Scott Bessent and the others, have gotten an indication that China's willing to do that. Now, Donald Trump today mentioned fentanyl as well, because 20% of those tariffs on China are tied to the fentanyl issue. Donald Trump talked about he's getting an indication that perhaps China can crack down on the precursors that are allegedly shipped across the Pacific and end up in the United States in the form of the fentanyl drug. So we could potentially see Donald Trump reduce maybe by half or even entirely that tariff because of fentanyl. We could also see a shipbuilding agreement. We could also see China ordering more soybeans. The sources have told Bloomberg already now 2 cargoes of soybeans have been purchased or potentially on their way to China from the United States. That's a political hot-button issue for Midwest supporters of Trump, obviously, because since the harvest began this year in the Midwest, beginning of September, China hasn't ordered any. So there's progress being made, according to Donald Trump. What's China's ask? Yeah. Well, clearly, it could be in the form of a major concession on Blackwell chips. That's something Donald Trump said he could possibly offer up to the Chinese, that the Nvidia AI accelerators could be made available to the Chinese.
All right, Bloomberg's chief North Asia correspondent Stephen Engel on location for us, giving us the rundown of Donald Trump's trip in Asia thus far, ahead of, of course, that highly anticipated meeting. We thank you so much. Let's go from that macro conversation to a micro one. Chloe Melly is here with our stocks to watch. Chloe.
Good morning, Kriti. Let's start with the banking sector today. We've had 3 really high-profile banks reporting this morning, and we've got quite positive trends across the board. So we had Deutsche Bank beating estimates thanks to really strong fixed income trading. We had also Santander reporting its 6th consecutive quarterly record in terms of net income thanks to expansion in the U.S. And UBS also reported strong investment banking revenue despite some challenges that came its way recently, including the collapse of First Brands and the increase in capital requirements from the Swiss government. So all all of those banks have been doing pretty well so far. UBS a little bit more muted because of those challenges that I mentioned, but we'll see how they fare this morning at the open. Moving on to GSK, which could also be moving higher today after upgrading its sales and profit guidance this morning. This was the last quarter that CEO Emma Walmsley was reporting as CEO. It's quite a good set of results to go out on, and we could see GSK moving higher and continue to outperform that broader healthcare index it has been over the last few months. And finally, moving on to ASM International, the semiconductor equipment maker, reported orders that missed estimates due to quite weak orders, especially in China, where obviously customers have been stung by trade tensions. So we could see the stock continues its being quite weak as it has been recently. The CEO did try to strike an optimistic tone, saying that this weakness in orders could be coming to an end in 2026. So we'll see what the market decides to really focus on this morning.
Yeah, thank you very much. Chloe Melly from our equities team with a look at some of the stocks to watch. We could also have mentioned Temenos, the Swiss software business. That could pop at the open next, upgrading its guidance around UK retail. So that's interesting. Yesterday, we saw trade distorted, if you like, Kriti, by that big move in telecoms. So up by 2% for the sector because Nokia getting that positive news flow, which had the word Nvidia and AI in it, and that sent that stock higher by 21%. So we'll see what pops this morning.
Yeah, maybe a little bit of a retracement, though. What goes up must come down, at least in normal times. That's going to be something we watch. But, of course, there's plenty of threads to digest. We have talked about this at the top of the show, that copper has been hitting a record as well. Do we see the likes of Glencore, Rio, et cetera, maybe keeping that FTSE 100 popping just a little more, outperforming the rest of the market?
Yeah, and that's the futures picture for us this morning, is suggesting that the FTSE might be a little stronger than the rest, but none of it looking to benefit too much from the positivity in Asia and US futures. The open is next. This is Bloomberg. Welcome back to the programme. This is the opening trade. A few minutes until we get the start of European equity trading for this morning. Let's have a look at the US session of yesterday, where we were when European markets closed and what that tells us about where we might go next. So this yellow line is sort of the middle of the US session, and that's where we were when European markets closed. So we'd had some of the stagnation in the early morning, but we didn't benefit too much from the upside. But I'm not all that confident we're going to keep benefiting from that upside, because a lot of that upside was to do with technology stocks. We did get a bit of that read across into the telecom sector here in Europe yesterday. So the relationship between Nvidia and Nokia, for example, pushing the telecom sector higher. So we have had a bit of that. And if we have a look at the European futures, it's not suggesting that we're going to benefit from that upside we saw late in the day in the US session. So if it was restricted to tech names, then sometimes that read across into Europe is a little unclear. So this is the futures picture then. FTSE 100 futures actually up by 0.2%. DAX futures signalling will be a little bit weaker at the start of trade. So, Kriti, maybe miners will make the difference. The banking sector very much in focus. That could lead us in all kinds of different directions.
I mean, it's earnings palooza, so it might not show up at the index level, but it will certainly show up on the micro level. And I think this one's really crucial. You mentioned the bank sector. Across the board, we had UBS, Santander, Deutsche Bank all come out with some pretty decent beats and perhaps impressing the market. Some buybacks, of course, announced in there as well. Nokia as well, I think, is a really fascinating one because, of course, we do have that AI potential premium that we saw in the previous days, or I should say in yesterday's trading session. So do we see some sort of retracement when it comes to that story? And of course, ASM International is one that we've got our eye on as well. It looks like TradeGate already expecting a drop after their orders missed estimates, Anna.
Yeah, absolutely. So the banking sector firmly in focus. All of the things you've got on that board there, GSK, Next in the UK, both of those businesses upgrading their guidance this morning. We'll see whether that has much of an impact. This is the picture then at the start of trade here for Europe. We're going higher on the FTSE 100. That was widely anticipated that we would see a little bit of outperformance on the London market. Other markets in Europe taking a little bit of time to give us their trades. And part of that possibly to do with the fact that we do have some real heavyweights in the banking sector reporting. We'll be keeping an eye on that SMI. I know we've got that in there today. We've got UBS reporting, of course, and so we'll see whether that one pops much higher at the start of trade. Also, Deutsche Bank will be in focus. Will that pop much higher? But more broadly, Kriti, we are expecting to see that some of these markets are a little on the back foot, and we certainly see that with the CAC 40. The tech story this morning seems a little more mixed than the banking story. The tech story plays well for the US, a bit more mixed here in Europe. The banking story here in Europe has had at least three heavyweight banking businesses with strong numbers, better than anticipated net profits, for example, from the likes of UBS, Deutsche Bank and Santander. So we'll see how all of those play out. Take us into some of the detail as we wait for some of these markets to open up here in Europe.
Yeah, it's a fascinating one here because I'm just kind of looking at how some of this is shaking out. I'm not able to see a clear read-through in terms of what is actually moving this market. No clear theme right on your screen. You can see that it is a little bit of a mixed picture. When it comes to the outperformer, though, this morning, I think we're going to give that trophy over to the financial services and the banking sector. No surprise there. UBS, Santander, all kind of coming, and Deutsche Bank, all coming in pretty hot. And UBS seems to be the biggest index contributor to the upside. But when you look at the downside, I think what's really crucial here is that you are actually seeing some of the travel and leisure stocks down by about 0.4%. I'm waiting for some of the miners to maybe pull some of their weight, given that copper record. But remember, Anna, we've had a good couple of days in the equity market, so maybe today is a little bit of a breather.
Right. I mean, to your point, you were suggesting in the break that basic resources could be a standout for London, and often when you see London go its own way, that is partly to do with either basic resources or banking or metals or oil, sorry. And we are seeing that basic resources, even though they're all not open yet, is the best performing sector across the Stoxx 600, and that is playing well then for the London market, it would seem, where we're just keeping our head above water. Interesting that we've got the auto sector not doing too badly as well. Mercedes does not seem to be open yet, but BMW is open. I certainly was looking at the Mercedes numbers earlier on today, and that seemed to be an area where we had some news flow. So I'll wait for the Mercedes numbers to work their way through, if you like. But we have had some numbers from there as well.
Yeah, absolutely. Mercedes, we got Adidas as well, so maybe that German kind of underperformance, plus SAP, of course, not having a great day as well. Looks like some of the unwind in the tech story is kind of interesting, given that we thought the AI story was now finally taking over Europe with the likes of Nokia, with the likes of Deutsche Telekom. Maybe there is still a little bit more to be seen. We're going to do plenty of market checks, of course, as we start to see this market shake out. But in the meantime, let's get some expert analysis. Monica Defend, head of the Amundi Investment Institute, joins us this morning. Monica, pleasure to have you on the show as always. Thank you for your time. We're trying to work out where maybe today's market feels a little bit slower than previously. In your opinion, what is driving European equities? Is it the trade conversation spearheaded by Donald Trump in Asia right now, or is there more of an earnings tilt to what you're seeing? What do you think?
Well, I think that the earnings story is definitely something relevant for Europe, and in particular on the banking sector. That definitely is probably one of the shining sector across Europe. Trade will be important, and it will be important to Europe to position versus China and versus the US and diversify. And we are seeing some nice movements and tangible movements out of Germany, trying to diversify on critical minerals. So there are some seeds that can really come up into flower in the coming months, I think.
Well, talk to us then a little about that earnings story. It feels like 6 months ago we were really keeping an eye out for margin compression. We were keeping an eye out for liquidity. If we did get some sort of bigger tariff hit, is that something that would get priced into this market? We're now seeing a tariff rate that's higher, or at least is higher, came down a little bit from what we were previously told, but is still higher than the initial numbers that came out on April 2nd. And yet this market is still rallying. Explain that logic when it comes to the corporate sphere. Margin compression and yet a rally on our hands.
Well, I think we are really living a transition towards an innovation-led regime that maybe in Asia and in the US is really AI-driven, while in Europe is more oriented to defense, to industrial policy changes that are aiming at strategic autonomy. And this goes, for example, in line with what we were saying before, in diversifying our exports, diversifying where we are getting critical minerals. So all this, plus the push that we are seeing towards a unified market, the endorsement by President Lagarde on the SIU, I think that this is all making a little bit of more optimism in terms of the European market. Having said that, usually markets are not really good in pricing regime shifts, which is what we are living today. And this is how I might see these different performances across sectors we are observing today and in the latest weeks.
Monica, good morning. You talked there about strategic autonomy of nations and onshoring or reshoring of certain manufacturing activities is one of the things that I know that you're watching. We talked earlier on this, in the last hour of the programme, in fact, about whether we should be more focused in markets on inflation than we are. How do you look at the inflation story and how that's going to play out in your investment strategy?
I think there are two stories on the macro front. One is inflation that is going to be higher than the central bank's target. But as long as inflation expectations remain anchored, this is not an issue. At least for the market, this is not what they are pricing as an issue. And the rationale for higher inflation is really linked to this transition towards an innovation-led regime, whether it's onshoring, climate, and the energy transition. So I think we're really going to live, in particular in the United States, with higher inflation rates. We project 3% on average for the next year. And the second story is productivity. Productivity is going to be central because it will define eventually the fiscal space, the inflation partner, the inflation patterns, and the monetary policy.
Can I ask you, Monica, how much upside do you think there'll be for stocks if we get a trade deal of some kind signed between the US and China this week? If it is limited in nature, if it talks very much about fentanyl and it opens opportunities maybe for Nvidia to sell more advanced chips into China, is that going to be something that lifts broadly sentiment? Is the absence of a fight over trade, is that enough? Or do we need to see more structural imbalances in the global economy being addressed in these trade conversations?
I think that in terms of trade conversation, what we are going to see is not a major change, a structural resolution on the key issues, but it will remain on the surface, just trying to get what the easy games there, the easy play. So we do expect a positive lift on the risk asset, but I think that you really need to control this order and to manage accordingly, which means, by the way, to be very selective in the way you position on risk asset, whether it's equity or credit.
Well, Monica, speaking of those risk assets, is this market just getting lucky? Are investors getting lucky here, given that we haven't seen as much volatility in the commodity prices? I mean, a little bit of some of the fund flow coming out of gold, but again, not enough to really shake this market. We have a range-bound bond market as well. Is this market immune or vulnerable to some of the cross-asset volatility that may be on the horizon?
I think the market remains vulnerable, and what is not pricing is the possibility of liquidity tightening that in case can happen very, very fast. And what we have seen last week with the Fed operating on the short end was really trying to address the potential on liquidity to dry up. And the announcement that we do expect of the end of the QT by the Fed is really addressing this issue. Second, on inflation, this is not really pricing by the market the potential for higher inflation in a context where central banks have a very difficult job because they are facing higher inflation and high debt. And this is not really the comfortable place for a central bank to operate. So some pocket of vulnerability are there. If you look at the concentration of the market, in particular in the US, it is really, really huge. And this is why we remain cautious exposed to risk assets and diversify.
Monica, thank you very much. Monica Defend, head of the Amundi Investment Institute. Thank you very much for that. So this sort of mixed market session that we're seeing ahead of a US session, Kriti, that looks as if it'll go higher on tech stocks and Nvidia. What does that mean for the core six?
Yeah, the heavyweights in the States certainly driving the market. Are they doing the same on this side of the Atlantic? It takes us nicely to your point, the core six. Green on the screen with some of those tech-exposed names. ASML, for example, even Rheinmetall, although it has had a rough couple of days. You are also seeing a little bit of love in luxury and healthcare. Again, these are all stocks that have been underperforming the last couple of days. I wonder how much of this is a rotation. I want to get a check on some of the other individual stocks on the move. Chloe Melly has that for us. Chloe.
Good morning, Kriti. So we've got Deutsche Bank up quite strongly this morning. We're up 3% for the bank after it beat estimates thanks to really strong fixed income trading. So this is quite a boost for the CEO just a couple of weeks before he unveils a new strategy that will be focusing a lot on growing and focusing on that investment banking division. So quite strong performance for Deutsche Bank today. Moving on to GSK, which is also up this morning after upgrading its sales and profit guidance. That was thanks to really strong sales of its HIV and immunology drugs. There's a few challenges going forward for GSK. There's been quite a lot of investor pressure in terms of the pipeline for new drugs, and it hasn't struck a deal with the Trump administration the same way that AstraZeneca has. But it seems that the market is really focusing this morning on the upgraded guidance and this beat on EPS as well. So we are up 3.7% for GSK. Moving on to Mercedes, which is also up this morning quite strongly, 6.5%. It confirmed its outlook and unveiled a 2 billion euro buyback. So that seems to be reassuring investors that maybe the worst is behind for that car maker, despite some continued weakness in China, which is one of its key markets. Moving on to ASM, which reported a miss in quarterly orders, and it is down as a result of that. It was actually up originally at the open, but it seems to be down now. The CEO did try to strike an optimistic tone, saying that those quarterly orders should be picking up again in 2026, but it seems that for now the market is really focusing on that miss in the quarterly orders for the third quarter because of that weakness in China in particular. And finally, Moncler is also down quite a lot this morning, 2.6%. The third quarter revenue actually did beat estimates, but what the investors are focusing on is that fourth quarter expectation seems to be a little bit too ambitious, and that means that there might be more turnaround efforts that are needed for Moncler. So we are down this morning for that company.
Chloe, thank you. Chloe Melly from our equities team then with a rundown of those stocks that are on the move. 12 minutes into our European equity session this morning. Fairly mixed, actually. Overall, the stock 600 not really going anywhere in a hurry. The London market outperforming. Some banking stocks across Europe doing really well as well. Coming up then on the programme, we will check back in on the European bank earnings stories. We've had a number of beats from Santander, UBS, Deutsche Bank. That conversation's next. This is Bloomberg. Welcome back. This is the opening trade. We're 16 minutes into a session that's trying its hardest to turn green before our eyes. The stock 600 just about getting there. The FTSE 100 pulling things a little higher this morning. The mining sector doing pretty well. Glencore results certainly one of the factors in the mix. Plus the mood music coming through from South Korea, where we have President Trump getting ready to meet President Xi tomorrow. That is sounding more positive and pushing some of those metals prices higher. Let's talk about the banking sector. We've had numbers that have beaten on many fronts. Let's talk about Deutsche Bank. Numbers there looking for the third quarter down the P&L. You see all of the numbers looking better than have been anticipated. In particular, I focus in my conversation with the CFO, James von Moltke, on what was going well in the credit space. So you'll certainly hear in our conversation a little more about that. But we started the conversation with what had pleased him most about this strong set of numbers.
It's a record quarter for Deutsche Bank. And really the pleasing thing is two things. All businesses are showing momentum and have been doing so for the 9 months and the 3 months. And we're on track to achieve our targets that we set out for 2025 all the way back in 2022, which is a return on tangible equity above 10% and a cost income ratio below 65%. And as you say, all the numbers are pointing in the right direction this quarter.
And can I home in a little on how you're performing in FIC? Because it does seem as if you've done better than some of the Wall Street averages, in particular around rates trading. I wanted to ask you about where you've managed to get some strength in that business.
Yes, so macro has been strong all year, up altogether in the FIC complex this quarter, 19%. And on an FX adjusted basis, that's, I think, in line with the best of our competitors. As I say, macro products have been strong all year, but in this quarter, credit trading also came through with very strong results. And so we like what we're seeing in terms of both sort of the market tone, but also our capabilities, our ability to gain market share in this environment.
And the September Fed rate cut, has that helped to drive volumes, hedging, rethinking of strategies in that area?
Well, certainly investors and also, if you like, real money, so duration managers are looking to position ahead of the Fed moves. We're expecting a move today, and I think the market is pricing one in for later this year as well. There's also been a fair amount of volatility. It hasn't been by any stretch of the imagination at record levels, but there's been a fair amount of volatility all year. That's obviously been conducive to the businesses.
You've also seen some strong performance in your asset-backed finance business and then the securitization of those assets as well, James. How sustainable is the growth in that area?
Well, let me start with, we've been in that business for a very long time, over 20 years, in what we call FIC financing. And it is essentially secured financing, as you say. The spreads have no doubt been under pressure as more money comes into that market. But at Deutsche Bank, we've been able to innovate and be in sort of new structures, new underlying asset classes, and that's served us very well in terms of the front book pricing. So we're confident about that business going forward, but obviously very aware that there's more competition both from the other banks as well as the private credit industry.
And talking about private credit, we've seen a lot of focus on that area, of course. I don't see any mention of any specific provisions for losses around some pretty high-profile collapses recently. I'm thinking of Tricolor and First Brands over in the United States. Ambipar in Brazil got a lot of headlines as well. Have I just missed those, or has your business been successful in avoiding those pitfalls?
We have, Anna. So you haven't missed anything. We weren't directly or indirectly exposed to any of the high-profile cases recently. Without chest beating, we think it speaks to the underwriting and monitoring of the portfolio. That portfolio is highly secured, low LTV. As I say, we've been in the business for a long time, so we know our sponsors and have good capabilities to sort of monitor the exposures and the underlying assets. So we're pleased to have been able to avoid, in this instance, those recent high-profile cases you mentioned.
Yeah, even if there's been no direct or indirect exposure, as you say, it's caused a lot of people to just check again at their exposures, in particular in the United States, perhaps, and other areas. Have you been doing that? Have you been taking another look at some of the exposures just to make sure that you're happy with everything?
We have. In an environment like the one we've seen, where a lot of capital is coming into the market, obviously you worry that has resulted in, call it, overexuberance and lax underwriting standards. First of all, we are strict and disciplined about our risk appetite and maintaining underwriting standards. But secondly, you get to learn from the experiences and naturally conduct a read across in your portfolio. We've done that exercise. We're comfortable with the portfolio. But obviously, we're vigilant as well to make sure that there's nothing that looks or smells like those recent events in our books.
That was the Deutsche Bank CFO, James van Moltke, speaking to me earlier. European banks are posting a flurry of positive results this morning. We heard there from Deutsche Bank. There's lots of others reporting as well. Let's get the take from Bloomberg's managing editor for EMEA Finance, Tom Metcalf, who has a roundup for us. Good morning to you, Tom. Let's start with Deutsche Bank then. Beating across the board, it seems, some strength in FIC. They are a bit concerned about credit mispricing, just like we've heard from some other quarters. But broadly, they've managed to avoid a lot of the pitfalls.
Yeah, exactly. A lot of very common messages coming out on the credit thing going. Obviously, we're looking at it closely, but as with other banks, not saying there's sort of huge risk there. So, yeah, the standout for me really was that beat on the fixed income side. Decent set of trading for them this quarter. And, yeah, it was interesting to hear the CFO kind of take it through just now in a bit more detail. But, yeah, I think their shares, up 1-2%, and it's really perfect timing because mid-November they have a new sort of investor day. So off the back of these sets of results, it's kind of a great springboard for them to kind of set out their
yes, because he was
targets.
making the point to me that this leaves them in a position to meet their 3-year targets, and this is the end, isn't it, of this 3-year period of reinvention, if you like, for Deutsche Bank. And then there is an expectation, Tom, that we get another round of evolution, not revolution, at Deutsche Bank, and continue with something similar in the next 3 years?
I think evolution is a great way of putting it. We say it shouldn't be, you'd expect, as drastic as the previous strategy change. But yeah, look, I think they'll probably make the argument it's working. Let's keep things going and obviously make those tweaks. And the phrase they use is we are the world's global house bank, HAUS bank, i.e. a German house bank. But every executive I've been meeting there has been fairly optimistic and positive, which does suggest, broadly speaking, behind the scenes, things are going along as hopeful there.
So Deutsche Bank having a good day, UBS having maybe an even better day. Just walk us through the logic there. The expectations were very low going into this.
Yeah, no, I think it's been a good day for UBS. So, blowing through estimates, and, as I look at the investment banking side, I'm like, wow, look at that advisory jump, 52%, that, or I think 47% on the advisory side. That is like, Wall Street top levels, obviously from a relatively small base, but no, been solid. And then I think the results at one point were up as much as 4%, the shares, but now they're kind of hovering around 3%. But good inflows, and again a similar message from the executives, looking closely at credit, but there is nothing systemic as far as we can see. This is all very much a case of individual underwriting issues with individual firms. Don't kind of extrapolate too wildly.
Yeah, I mean, and on that private credit front, we just had a conversation with the CFO of Santander about the exact same thing. He reiterates that message. It's not systemic, but kind of stopped short of saying that this is not a problem that they are specifically addressing. Nevertheless, their results also pretty decent.
Yeah, no, exactly. Sort of, again, no nasty surprises, which I think for Q3 is pretty critical. Santander, one of Europe's largest banks by market cap, and, on the bread and butter side of NIM, that sort of standard bit of banking, they seem to be doing a good job. And again, it's just making sure they avoid those big outside surprises is really helpful at this point.
Tom, I thought it was really interesting. I was trying to get to the bottom of why we're seeing sort of consumer sentiment in the States really quite weak, but it's not showing up in the credit metrics, it seems. That seems to be the message that we're getting from some of the banks. And he was saying that is the case for them. He said they are seeing some delays of more than 90 days increasing in their books, in their loan books, in the US specifically. But in terms of recovery rates, they're actually just as they normally would be. So maybe it's taking a little bit longer to get the money in, but nothing really to worry about. And I mean, a lot of people point to the K-shaped nature of the US economy as well as one of the reasons why perhaps we're seeing areas of concern around consumers, but that's not showing up on loan books.
Yeah, exactly. And it's a similar story to most of the banks I talk about, where there is this macro picture, whether in the States or in the UK, but every time it's like not an issue, at least as they see so far in their books. There isn't that many bits and indications of distress. So it is a bit of a disconnect, and it's one of those ones where which way is it going to go? Is it going to sort of suddenly all these troubles start to emerge as the pressure builds, time goes on, or as the bankers are certainly saying at the moment, is no, underwriting standards are very different these days. We are taking caution, and hence we can be pretty optimistic.
All right, Bloomberg's EMEA Managing Editor for Finance, Tom Metcalf, kind of playing double duty. He's our banking correspondent this week. We thank you so much. Let's go to check on some of the U.S. pre-market stocks. It's the most wonderful time of the year where that time difference is just 1 hour shorter. Nvidia, of course, top of mind after another blockbuster deal. That's two big European deals in 2 days. First Deutsche Telekom, now Nokia. And we saw those, of course, show up in the price action yesterday, Anna. Nvidia shares in the pre-market. Another leg higher, almost 3%.
Now, if you're talking about cautious consumers, and I know this, I speak in jest because this isn't just about the US, but here's Mondelez trimming its outlook because cocoa prices have risen and consumers are therefore cautious. If you can't afford chocolate, it's a strange world we live in. But Mondelez down by 5.6% as a result of that pre-market in the States. Coming up, we speak to the Nordic Semiconductor CEO as the company misses third quarter earnings forecast. That conversation next. We'll dig into the detail. This is Bloomberg.
This is the opening trade about 30 minutes into today's session, and seeing some of the money kind of already move around. I think the highlight of this very boring board is at the very end here. The FTSE 100 higher by 0.4%, and that's a real game changer. Yes, we did start off this session with a little bit of outperformance, but it's really accelerated, and some of the momentum and some of the other indices have dropped. But it's really a micro day instead of a macro one. And I think that's where you need to really keep an eye on some of the individual movers, because we are in the midst, of course, of earnings season, drinking out of a fire hose. When you look at some of the membership here, 250 names higher, 334 lower. The volume, of course, also just slightly lower today, down about 15%. I think keep an eye on what some of the rotations actually look like. I want to start with some of the laggards here, given that's where the market is actually moving. I'll start with the gainers, I should say. AstraZeneca is, of course, the big one. This rotation in healthcare that you're seeing, is really one you want to keep an eye on. But remember, AstraZeneca moving up the FTSE 100 in a very big way. ASML probably taking its tone from what you're seeing in the tech space over in the U.S. Globally, tech has been doing very well in the last 24 hours. And even Adyen having a very good day, higher by about 9%, of course, in the payment services business. Let's talk about the lows, though. This is where the negativity really prevails. I want to talk about the healthcare space here because Novartis is a big one. We saw that move yesterday as well. It is taking another leg lower, down about 1%. SAP, of course, also dragging down the index, down about 1.5%. And some of the steam coming out of the momentum, Anna, that we saw in yesterday's session from the Nokia story, down about 5%. But again, put it in context, yesterday rallied 20% to the upside.
Yeah, absolutely. Let's get an update on some of the broader global news stories that we're tracking this morning then, Kriti. Hurricane Melissa has made landfall in Cuba just hours after it became the strongest recorded storm to strike Jamaica. The storm left hundreds of thousands of people without power on the island of Jamaica and forced hospitals to evacuate. Melissa crossed into Jamaica with sustained winds of almost 300 kilometers per hour, making it a rare Category 5 hurricane at landfall. The Israeli army says they have started reinforcing the Gaza ceasefire agreement. This comes after the government ordered, quote, forceful strikes against the militant group in response to attacks on Israeli soldiers in Gaza, which the country's defense minister called, quote, a crossing of a red line. The official Palestinian news agency said at least 20 people had been killed in the strikes, citing medical sources. Donald Trump said he expects to lower tariffs that the U.S. has posed on Chinese goods over the fentanyl crisis and speak with China's Xi Jinping about Nvidia's flagship Blackwell AI chip in their meeting on Thursday. In another sign of easing tensions, China bought at least 2 cargoes of U.S. soybeans, its first purchase or known purchase this season. Kriti?
Lots to watch, of course, in the trade relationship between the world's 2 largest economies. And this might be a connected theme as we talk about the tech story that is, of course, permeating in those discussions. Results are out this morning from tech firm Nordic Semiconductor with third quarter EBITDA missing estimates. I'm pleased to say we are now joined by the CEO of the company. Vegard Wallen joins the program. Vegard, a pleasure to have you this morning. Thank you so much for joining us. We're seeing some weakness in your numbers this morning. Can you just walk us through where that pain point lies?
Well, I think, for us, if we look at 2025 as a combined, and if you look at our midpoint guidance now of Q4 and compare that to 2024, we will actually see a 30% growth in our revenues from 24 to 25. Obviously, taking into account that we did quite a lot of inventory corrections in Q1 2024, even with that taking into account, it is a substantial growth, and particularly if you compare us to the broad-based semiconductors. So given that this is predominantly based on relatively old products, which we have been talking about, there has been a phase from 2019 to 2024 where Nordic launched relatively few new products. We see that we actually are following our plan and an ambitious plan on this, because the key thing for us that we are in the midst of a product renewal cycle, which is happening now. We are a year into it, have launched great new products, and there is much more to come in the coming months and quarters. And it is the excitement and the energy we see from these products when we develop with our key customers, particularly, but also to the broad market with these products, where we see the coming growth. And of course, for us at Nordic, it's all about growing for the years and for the long time coming.
Vegard, I want to build on that. It's an ambitious plan, of course, to have a product renewal cycle. But I have to ask you about some of the kinks and some of the hurdles that may be coming as you pursue that cause, especially in the supply chain front, especially when it comes to the tech story. We're talking a lot about availability of rare earths and some of the raw materials, some of the supply chain issues, not just coming out of Asia, but, of course, permeating into the European ecosystem. Just walk us through how you're thinking about that. Is that a worry for you as you pursue that product renewal cycle?
Yeah, great question. I think overall, of course, we depend, as a fabless semiconductor, we depend strongly on our key partners, and they securing materials and the basic substrates and substitutes which are required for our manufacturing. And for Nordic Semiconductor, that means that we are depending on TSMC in Taiwan and Global Foundries on the wafer manufacturing side as our largest foundries. Having said that, we are also driving a diversification in our manufacturing to become even more resilient than what we currently are. And we're seeing this happening. TSMC building their new fab in Dresden, Germany, which is planned to manufacture for us. We can manufacture at other TSMC fabs as well. And with GF having manufacturing facilities in Asia, obviously in Germany already, and in the US already. So we do see that we are building a strengthening diversification in the years coming on that.
Good to speak to you, Vegard. Thank you very much for joining us. Let me ask you, you mentioned the product renewal cycle, so let me ask you for more detail on that. You're pivoting towards a new series, NRF54L. Can you give us a bit more detail on the timing of when that starts to meaningfully contribute? When does that pivot really kick in for you?
Yeah, that's a great question. Our offering needs to be a broader offering, such that for, let's say, simpler, lower end, very cost-constrained products, we have certain chips which are fitting into that category, while we, at our high end, has products which has multi-CPUs, also usually can do the application processing and be a powerful compute system aside the wireless connectivity and the range in between. So we need to make sure we offer this full range to cover a broad range of applications and serviceable markets we are addressing. We started this 54 series renewal in November last year with the first products in that series. And after that, we have been launching multiple new products, and there are quite a few more to come in the coming quarters. The way we do this is that we develop these products with our key customers, our large customers, and then we offer it to the broad market. And then there is a design in cycle at their end where they develop their software, complete their products, and move into manufacturing. And that does take some time, and it varies. The fastest ones can do this maybe in 6 or 8 months, whereas others are spending 2-3 years on their development. And then, of course, you have everything in between. And that's why we say that we are now going to see from 2026 onwards that it's going to be an accelerating and increasing contribution from the 54 series in our short-range business.
OK, thank you for the detail there. Can I ask you about, you were talking about the supply chain with Kriti. She was talking about rare earths, and you gave us a bit of detail on securing supply chains. I just wanted to get a bit more detail from you on that, though. If we do see supplies of rare earths to Europe disrupted, and I appreciate you've talked about the various fabs and where they are, what kind of precautions can you take for a business like Nordic Semiconductor? What can you do now to stop the worst outcomes?
So for us, again, not having the manufacturing ourselves, it is predominantly what we can do is to diversify with multiple angles to get access to the base materials and to the silicon manufacturing, and that's really what we are doing. And by diversifying that, it means between multiple suppliers, but also having multiple suppliers with engagement in different countries and geographical regions. So that's really what we do, and I think most people in our sector are working this way.
Thank you very much. Thank you very much for joining us. Vegard Wollan, thank you for your contribution this morning. Good to speak to you. Nordic Semiconductor's CEO. Let's stick with the tech theme. Nvidia shares extending their rally after US President Donald Trump said he'll discuss the chipmaker's Blackwell AI processors with the Chinese leader Xi Jinping. The company's CEO, Jensen Huang, told Bloomberg it would be a bonus if Nvidia's business in China were to return.
We're currently assuming China is going to be 0% of our business. And if it comes back, if President Trump was able to negotiate, or if China would like us to come back to China, it's going to be a huge bonus for us.
Joining us now, Matt Bloxham from Bloomberg Intelligence. And this seems to be driving a lot of hope and expectation then this morning, Matt. We'll see whether it comes to pass. So President Trump and Xi Jinping, busy agenda, but one of the things on there might be Blackwell and the ability to sell that architecture into China. So it's interesting, isn't it? Because you think that it's been the US administration that stopped the sale of chips into China, and that might be to some degree on the security side. But actually, Jensen Huang was saying it's the Chinese not wanting the lower capacity chips that stopped us really doing the business here. So what kind of progress are you expecting them to make?
Yeah, I mean, this would be a real kind of U-turn, if you like, on US policy if they do allow Blackwell to be sold into China. This is their most advanced chip, which is in huge demand as it is anyway, and would have significant positive ramifications for the whole chip value chain. So the likes of TSMC and ASML, for example, just add more demand out there. So we'll have to see whether this really comes to light, whether there's going to be a big delay in when they get this. Obviously, Nvidia's already moving on to its next generation chip, so maybe they're kind of a bit more comfortable with it, or maybe actually in the background the US can see that China's own domestic AI endeavours are actually accelerating at a faster pace, so actually holding Blackwell back isn't really going to do anything to stop China's own advancement. So we'll have to see, but it's a really kind of quite eye-opening change in policy stance from the US.
Yeah, it is fascinating. It started under Joe Biden initially on national security concerns and has, of course, fed over into Donald Trump. I think what's fascinating, though, is he said that we are at 0% sales of China. This was the Achilles heel for Nvidia a couple of quarters ago. How much could that add in terms of their bottom line when you say yourself that they're kind of drowning in demand right now?
Yeah, exactly. Difficult to know, but I mean, when you look at other kind of similar technology firms, it kind of ends up being kind of 10, 20% of revenue. I mean, I wouldn't want to say that's exactly what they're going to get, but there's clearly a lot of demand there in the marketplace. There obviously is rivalry with the likes of Huawei in particular being a big competitor, and that the Chinese government has been really pushing Chinese companies to spend more with Huawei on their AI technology. So hard to know, but yeah, you have to think that China would end up being a significant share of Nvidia revenue.
So Nvidia, it looks as if it's going to open up with a $5 trillion market cap this morning, because it is expected to get another pop. We've seen it pre-market trading higher, expected to get another pop higher on the back of these headlines around Blackwell. But it's not the only tech story we're watching today. We have so many tech stories. In fact, 5 out of 7 of the Mag 7 are reporting either today or tomorrow. That's around a quarter of the S&P's market cap, isn't it? So there's a huge amount of focus on tech. I don't know where to start. I'm going to go with Microsoft. Okay. Matt, let's start there. A big focus on cloud and their tie-up with OpenAI, of course, as well.
That's right, yeah. So Microsoft's Azure platform, big leader in cloud and AI. So Azure, the market's looking for about 37% sales growth, which should be kind of sustaining the kind of strong growth they've seen. I think the big question there for analysts is, Microsoft's been talking about a constrained supply to meet the demand, and so there's potential expectation that maybe they'll announce some more investment, if we don't have enough already, to kind of accelerate their ability to kind of meet that demand. Obviously, there's the OpenAI story. I think also that's been playing out for a long time, and I think what we saw yesterday in terms of the kind of finalisation of this for-profit change and Microsoft getting a 27% stake in OpenAI is the kind of culmination, but it's been a great deal for Microsoft. They invested something like $14 billion in it. It's now, their stake's now worth $135 billion, at least on paper. They get access to the OpenAI technology stack until the 2030s. They still get a 20% share of OpenAI's future revenues, and OpenAI is still committed to spend something like $250 billion on Azure technology. So it seems like it's been a great, great trade for Microsoft.
That's Microsoft. Let's talk about Meta and Alphabet. We've gone into every tech earnings season saying that AWS and Azure have just the edge. Is that still true with Alphabet on their heels?
I think it is, but clearly Alphabet through their kind of Google Cloud Services is making inroads. Obviously, they kind of made some interesting deals of their own recently, like I think Anthropic has kind of committed to do a lot of stuff with Google on both the cloud capability and their chips. I think the big question for both these companies is how their quote-unquote legacy advertising businesses are holding up in this kind of AI environment. You know, Google's search business, which is under pressure from ChatGPT, and Meta's kind of equivalent kind of social media businesses. Are advertisers still spending as much money on those platforms, or are they shifting it more to ChatGPT and other AI platforms? For both of them, that's a kind of high-stakes situation because they've both been pouring tens of billions of dollars into the AI revolution on the basis they can fund it with AI revenue, sorry, advertising revenue. And so I think people are going to be focused on the strength and resilience of those businesses with that competition rising.
All right, Matt Bloxham from Bloomberg Intelligence setting us up nicely for some of the earnings we're going to get after the market close in the United States. We thank you so much. Speaking of what's coming up ahead on the program and, of course, in the day, the snap election in the Netherlands is underway, widely seen as a litmus test for the far right. Our very own Oliver Crook is live in The Hague next. Stick with us. This is Bloomberg. Welcome back to the opening trade. About 50 minutes into today's session, it looks like nothing's happening on the surface except for the FTSE 100 higher by 0.4%, but plenty of individual moves across the wire. Kind of a rotation trade in these markets. We're going to keep you apprised of all the market moves in the hours ahead. In the meantime, some headlines crossing the Bloomberg terminal just in our commercial break, this time coming out of Romania, confirming some suspicions that people have had for a while when it comes to U.S. troops in Europe. It looks like Romania is saying that the U.S. will stop their rotation to Bulgaria, Slovakia, and Hungary. This is according to the defense minister speaking in Bucharest. A crucial time, Anna, ahead of a meeting between Viktor Orban and Donald Trump next week, where it looks like he's going to be talking about some of the oil concessions that are being made as Donald Trump really gets very hard and very pressury on Russia, for lack of a better term.
Yeah, OK, so that's part of the European conversation, everything around defence, certainly. Let's talk about European politics in the shape of a Netherlands election. Voting is now underway in the Netherlands after 2 years of political turmoil under the most right-wing administration in the country's recent history. Defence, immigration, the cost of living, all among issues that are top of voters' minds. Bloomberg's Oliver Crook is on the ground for us in The Hague. Good morning, Ollie.
Yeah, that's right, Anna. And you can see behind me just some of the posters of some of the parties that are going to be going up to the parliament here. And we should say there's some very peculiar sort of features to the Dutch system. For one thing, there are 15 parties that are represented within the parliament. So we talk about fragmentation in European politics. This is really ground zero for that. We should also say that going into this vote, about 50% of the voters were still undecided. So it's really for anybody to take. Going into the voters' day, also the last poll we got saw a three-way split between the three main parties. So there's a lot of questions about what we could get, what kind of constellation we can get in the government. So I'm very pleased to be joined by a guest to try to work through what some of these could look like and what the implications would be. That's Davis Ellison. He is at the Hague Center for Strategic Studies. Thanks so much for joining us this morning. I'd like to begin just kind of with your expectation for what we're going to get today out of the Netherlands.
Absolutely. Well, first of all, thanks for having me on. It's definitely an exciting day here in the Netherlands. There's a lot that could certainly happen. As you said, there's a three-way split with some of the largest parties right now. I think what some of the scenarios we see are most likely are some sort of centrist coalition, one that vaguely leans left, for example, with the GroenLinks PvdA, which is this sort of coalition itself of left parties, or a more centrist right-leaning one with the Christian Democratic Appeal leading.
And so with that sort of constellation, I think one of the things that we've heard from a lot of analysts is that this will mean a more constructive relationship between the Netherlands and the European Union. This could mean, for example, moving forward on the question of joint debt, where there has been an evolution in the traditionally frugal Netherlands. What is your expectation there? What a more constructive relationship looks like?
I think that's really going to open up as a discussion. I think that's going to be a priority for any cabinet that's coming in. A lot of the initiatives that they're talking about, defense being one of them, for example, trying to hit 3.5% of GDP on defense without accepting any sort of austerity measures at the same time, really opens up the discussion of debt and common debt, especially at the European level. So I think they're really going to have to embrace that discussion, and I think the three major parties are actually quite open to it.
And I think something that maybe hasn't featured so much in the domestic debate, but for our audience is certainly a big discussion, is what happened with Nexperia, the Dutch government really sort of coming out of the blue, taking control of this business that was owned by the Chinese. How do you see that sort of resolving itself? And do you think that there is sort of less naivete now dealing with China? And do you think you could see more action like that in the private sector?
Yeah, I think there definitely is. I think Chinese ownership in any way the subsidiary arrangement exists has been on the radar of different national security services across Europe for a while now, and especially when it comes to semiconductors. And I think this was almost more a matter of time than anything. Nexperia also has much less leverage as compared to other companies like ASML, which is much more of like a flagship major commercial concern here in the Netherlands. Nexperia finds itself as kind of a smaller fish in the supply chain, and I think this is something that's going to continue. I think, the topic of economic security as a theme has started to feature more broadly across most parties.
And also economic security is also sort of a euphemism for some sort of economic warfare, which we're certainly seeing waged by the United States. And the Netherlands seems very distinct because you have this company here, ASML, which is one of the very few European companies that really is, basically has no rival in the lithography machines and really has a lot of sway on the global markets. How do you see that as potentially being used as economic leverage? Is that more a conversation that we're going to have within Dutch politics and how to use ASML?
Yeah, I think that it's definitely been a growing point for Dutch policymakers and politicians in thinking about ASML that way. Commercial concerns were always very much on one side of the coin and they were on another. But I think that started to shift with the realization of how central ASML is. It's a little bit with the way that the Taiwanese have placed themselves with TSMC, knowing how important they are and not diversifying some of that. So I think really keeping so much of that flagship work here and as a contained thing here in the Netherlands as ASML is going to continue to be very important for them. And I think they do see it as leverage for any outside pressure, for example, from the United States.
Davis Ellison, thank you so much for your time today over from the Hague Center of Strategic Studies, dealing with some of the main issues here that we've got in the Dutch election, many of them domestic, but of course also ways in which it plays on the global stage and critically on that issue of joint borrowing for the European Union.
Bloomberg's Oliver Crook joining us from The Hague, walking us through, of course, as he said, the global issues that are coming from this election. Speaking of what's coming up in the day ahead, of course, that snap election very much in focus, rate decisions in Canada and, of course, the United States, plus plenty of earnings.
Plenty of earnings. Shall we say Microsoft, Alphabet, Meta, all of those in focus. 5/7 of the Mag 7 will report today and tomorrow. So there's certainly a lot at stake when it comes to all the capex that we've seen put behind this AI growth story.
Yeah, the capex, there's a little bit of a geopolitical tilt to this as well. Does some of the conversation coming in between the United States and China that we're already seeing Nvidia be a part of the conversation, does that affect the rest of those Mag 7?
Yeah, such a busy day for earnings. A lot of expectation around the Trump-Xi meeting tomorrow as well, so that will certainly be in focus, and that is adding to a little bit more risk on sentiment, certainly helping the mining sector, at least here in London, even if it's not lifting the rest of the European markets. That is it for the opening trade. A really busy earnings day. The brief is up next. This is Bloomberg.